So it's Sunday, but I'll be doing today this past week 4 weekly review slash recap slash backtest, whatever you wanna call it, and I'll be doing yeah on DXY, EU and GU mainly. I think I'll not be going to ES or NQ because those markets are now on all-time ice conditions and not only that, but I think that my focus now as a trader is more on forex. I believe that indeed indices can be a better market in sense of spread, in sense of price delivery, because every single ES contract, not contract, but every single broker that has ES has same price valuation as others brokers. Same thing on NQ. If NQ it's currently at 17,504. Then this means that in every single exchange slash broker, that's the same price. Whereas EU and Forex currencies, in this case Forex, those change sometimes. But for my style of trading, for the time that I trade in intraday, for the time that I trade, I think that change and that I made from indices to EU has been a favorable and a net positive slash ROI positive change on my trading style and on my trading results in some sense. We are currently as well in the on all-time highs conditions, so I will be not trying to catch an eye soon, and I'll be just buying if I was going to be buying because yeah, that's basically it. You're just on all-time highs conditions where every, above these highs there's buy side resting, so this means that there are people trying to short this eye right here. So we are likely to continue higher and higher and higher before an SMT happens. And once an SMT happens, like it happened over here, then indeed I can try to go back into ES or NQ and try to find some reversal idea in some sense. But I will be doing today DXY. It's for this past week 4, and it's from the day of 22 on Monday to 26 on Friday. And then the next week, I will be not referring that as week 4 or week 5 because that's going to be a Passover week. We're going to have from the 29 on Monday, which is tomorrow to 2 on Friday, which is going to be second day of October, meaning that this is a Passover week that's going to happen, and it's not that I don't refer to those weeks, but usually the week 4, the Passover weeks in this case, the week 5 or week 0, those are usually used for delivery and expansion slash manipulation. That happens a lot of times, and I'll I think that I'll be not I think that if you want to have something on the Passover week, you might already have an open trade already with stop loss trailed and already being managed the position, meaning that Passover weeks are not a week, are not a time of the month that it's meant for you to enter a position, but it's meant for you to hold a position. And I'll be talking about this today where the XY my drawn liquidity it is monthly drawn liquidity. And if you want to have something going into these monthly highs, then I will I would have ensured that if I didn't buy on week 1 right here, if I didn't buy on week 2, if I didn't buy on week 3, if I didn't buy on week 4, then I will not be buying today. Neither next few days, the next week of week 4. There is no reason to be doing that because we had all of this time from the monthly open right here to the monthly close to be buying, and you are trying to buy on the last portion of the candlestick, and that's not what you do. Yes, there's a macro. Yes, there's a likely for price to expand, right, with this close of with this candlestick close. What I mean by that, I'm giving some things that are not about the weekly candlestick, but let's just end this. So this is the idea. So you have the open, low, high close. What? This is the candlestick for the month. Open, low, high close. Now we're likely to see more upside, and we are more likely to see like a. If you don't trade to this, then imagine that we make an high, we close, then you can see an open high and something like that. But it is not me trying to predict the next monthly candlestick because I do that on another studies. I do that on another exercise of trading. But what can I say is that we had all of this time. Okay, you didn't catch this Monday low. That's fine. We could catch this breaker. We could catch this inversion fair value gap with this Friday intermittent low. We had all of this time to accumulate for smart money to accumulate a buy position into these monthly drawn equities. So onto this monthly drawn equity. So if you didn't, or if I didn't buy and I didn't enter this monthly swing trade in that sense. But if you didn't enter at this time, then at this last portion on this 75% of the dealing range. So imagine that instead of a dealing range, this is an implied dealing range. We are now at 75%, and right here, this accumulation is not a thing that you would like to see, but meaning that this can actually be lower prices. So that's the main idea. On the last portion of a delivery, you either have a trade holding already open. So imagine that you have bought here, stop loss here, best case scenario, a 3R, right, and you have into here. The idea is that this stop loss is now trailed and trailed and trailed manually to this intermittent low. And now we're just expecting price to continue on the upside after trading above this high time frame key level, which is now going to deliver up. This accumulation, like I mentioned, on the 75% of the I have the key levels is 75 is not what you would like. It's not what's the word called, recommended to see, but that's something to have in mind and be cautious of. And that's how you could have been expecting some consolidation in some sense. But there's no point right now in entering in a premium, in entering at this last bit of a move. You're going to get chopped up. You're going to get not the best delivery, and you should for a monthly swing trade you should already be inside of a position. If not the monthly low, the January low, that will be now the weekend, this week 2/week 1 lows to then continuously delivery on the upside. But going to the week that's which is week 4 for January, when ending the weekly the ended the month of January, the week 4, where then we are going to be followed by a Passover week with Monday, Tuesday, Thursday. There's no okay, Monday, Tuesday, Wednesday, Thursday, and then Friday. So next week is going to be that Passover week that I mentioned. But going to today, I can see that we have this monthly reversal, which is this inversion fair value gap. So a easy way to identify if an inversion fair value gap is going to be held, or if a fair value gap is going to be, in some sense, validated. Where I mentioned this in the I think the last week 2 recap, where I mentioned that a lot of people were looking at something like this for DXY. They're looking at this internal range liquidity, external range liquidity. Why did that not happen? Because a monthly drawn liquidity, so 1 month, 2 month, 1 month, 1 week, or 2 week, whatever. 1 week, 1 day, 12 hour, 8 hour, 4 hour, 2 hour. So if in this case we have a 1 week CB, right? So 1 week right here. But we have a 1 month drawn liquidity. This means that if the monthly liquidity is dominant slash higher in the hierarchy of this delivery in this sense, so these eyes in the like the pyramid, right? In the hierarchy of the pyramid, I don't know how to say it, but like the pyramid, you know. Imagine that this is the 1 year, 1 month, 2 week, 1 day, 12 day, wait hour, 4 hours, etc. So this is because the I time frame is higher. This means that this 1 month is dominant above the 1 week. So that is also why this week 1 I, instead of being a reversal POI, right here, this week 1 I, instead of being like back to the order block buy side liquidity pool, week 1 I, and then reversal on the downside, it was instead broken on the upside because this is not a reversal point of interest, because we have the monthly drawn liquidity which is dominant, and it's parenting these low time frames, because the 1 week is a low time frame compared to a monthly, and this is the monthly drawn liquidity at this previous moment. It's the low hanging fruit. Low hanging fruit. We can go higher, but this is the drawn liquidity where I expect some kind of reaction, either a reversal, turtle soup reversal, or either a turtle soup retracement continuation. Going to this week 4, I can see on DXY the I can see price reaching lower into the discount week, into the discount of the week 3. So dealing we price used the previous week dealing range as a premium to discount relationship, and with price drop lower into OTE slash discount, and after that we had price delivery on the upside. So our current understanding of this candlestick until now is that we had a open based on the weekly chart, a low, a high, and then followed by a close. So this is the current candlestick where we expect that we have an opening price. Price first made the low of the week, which is then followed by a retrace, which is then followed by a reversal slash change in state of delivery, and then the price delivery on the upside into the week 3 high, which is then the second reversal of the week, making the high of the week, and then trading lower, closing the week. But that is not what happened, and we're going to see that on the low time frames. And how could I have known that instead of the low of the week being the first reversal of the week, meaning that price opened and made the low instead of opening and making the high? How could I have know that indeed this is wrong? This idea of I'll be doing this on the 1 second. This tool. This is what I meant by opening, low, high, close. This is the idea based on the weekly candlestick. So this is what I believe. This is what I can see on this based on this information, which is given by me by the algorithm, which is that we have an open, weekly low, weekly high, and weekly close. This is basically what I believe, what I can see. But if I go deeper and inside of the 1 week, of this week 4, of this weekly candlestick, what I can see? I can see indeed nothing, because these tools, la saca. Uh, uh, this, this, oh, fucking. uh, Visibility interval and below. So on daily chart, what can I see? I can see a completely different scenario. And that scenario is that we had the weekly open. We had the weekly open and weekly close. And first price made the high of the week, which is then delivered by this first reversal, making the low of the week on Wednesday, and then it's followed by higher prices. So this is what I believe, what I can see on the 1 week candlestick. This is what I can see based on this is the hypothesis. I think it's how it's called. Let me just guess.
Hypothesis.
Yeah, that's hypothesis. What?
Hypothesis.
Hypothesis. So that's what I can see on the 1 week candlestick. But in reality, we had a different delivery. We had a different time on the reversal. We had the opening. We made first the high of the week for high. We made the week for low, but this was followed then by a bullish close. This is indeed what happened on this week, where the high of the week was made first, followed by the low of the week being made after. So instead of weekly low, weekly high, we made weekly high first as first reversal, first week reversal, second week reversal. This is what I can see based on the weekly chart, but going deeper, I can see that in reality, we had the first weekly reversal being the high of the week, followed by the second weekly reversal being the low of the week, and price reversed again on the second weekly reversal, and closed this candlestick as a bullish up close candlestick. And that's why we had a small body on the candlestick and not a trending body, because if a candlestick is going to trend, you can never expect this. Never. Sorry, below it. If you're going to have a trending candlestick and you see price making first high of the week, then it's not going to be a trending candlestick, because trending candlestick immediately makes the low of the candlestick and then trades higher, makes this candlestick above it, because this is the pattern, in some sense, the pattern that makes a trending candlestick, and is a pattern that doesn't make a trending candlestick, a bullish, in this case, trending candlestick. Fuck, I'm tired. Give me a second. Okay, so back to the charts. What can I see? Weekly open, weekly close. We had Monday trade lower into this Thursday low, creating this bullish candlestick, small bullish candlestick as an accumulation, which is which is the continuation of the week 3 with Wednesday, Thursday, Friday, and then Monday small candlestick, and then on Tuesday we had price trade lower into the Monday low, into the inversion fair value gap, which was my weekly reversal. This was my POI, point of interest, for this weekly reversal, and is then followed by price expanding on the upside, making this reversal and then expanding into the previous week high slash week 3 high. And this was my first alarm warning, I would say so, because Tuesday does not usually deliver it like this. Tuesday many times can make the low of the week as that accumulation, manipulation, distribution, or Q1, Q2, Q3, Q3, Q4 as of the quarterly theory by day. But Tuesday doesn't deliver like this. Tuesday doesn't make the low of the week and the high of the week. It doesn't make that. Most of the times it can make the low of the week, and that is usually seen as the first reversal of the weekly candlestick. But immediately on that same candlestick, on that same Tuesday, trading to the liquidity pool, that's not a usual thing to see. So we add a bullish Tuesday candlestick, trading into the weekly reversal, into the 50% of the previous week, which is then followed by price trading into the week 3 high into this buy side liquidity pool. So for price to make the high of the week for this week, we had a bullish candlestick as a bullish reversal. On Tuesday we have this Tuesday reversal followed by this second Tuesday reversal making the high of the day. So low of the day for Tuesday, high of the day for Tuesday. And the second high of the day for Tuesday was the high of the week for today's week. And why did that happen? Because Tuesday delivered into the week 3 high, into the buy side pool, which usually does not happen. It can make the reversal. If indeed this candlestick was a bearish candlestick or a bullish candlestick, but it didn't head trade to, this weekly 3i slash buy side pool, then I would expect Wednesday to be the continuation as an OTE continuation. But because Tuesday had this uh, bullish turtle soup, followed by this bearish turtle soup making the eye of the day, which was the second, was the second reversal slash of the day, which was the first reversal of the week because it was the weekly high, weekly low. I can see that then on Wednesday price delivery on the long side, making the low of the week instead. So a lot of traders entered here at a very good turtle soup reversal, reaching into this weekly high, so they took a partial or they closed out. But if you're looking at this high time frame monthly drawn equity, then if you had this trade opening, you would have been closed on Wednesday, where Wednesday made the low of the week. So from Tuesday high to Wednesday low, this was the biggest portion of the move. These 2 days, Tuesday and Wednesday. Thursday was basically not an inside candlestick, but it traded back into the weekly open a little bit higher, then just a lower, followed by this Friday choppy candlesticks. But the entire weekly range was made from the Tuesday high to Wednesday low. Tuesday candlestick was a bullish candlestick. Price open, low high close, meaning that the second daily reversal slash eye of the day was the eye of the week. Wednesday candlestick was a bearish candlestick. Open eye, low close, meaning that the second daily reversal, low of the day, open eye, low close, was the low of the week. What can I see? Why do I believe that higher prices are likely even though of this accumulation? Because we have this busy being respected. Wicks are doing the damage, but bodies are still respecting and not trading. So a lot of traders got stopped out and shopped, while price dropping into this busy, making this swing low. But indeed, the bodies are telling the narrative that higher prices are likely to be continued on the near future. That's why I'm believing that higher prices are still likely, and that's why I'm believing that this monthly drawn liquidity is still on liquidity, coupled with the fibs from where the minus 2.5. So there are a lot of um, confluences on this monthly draw on liquidity. Going into the 12-hour chart, What can I see? I'm noting half of the week, so this is the not here, it's this one. It's the Wednesday 7. So right here we have half of the week. This was the half made. And what can I see? I can see that on first thing that I can see is that the price traded back into this balanced price range. So this Friday high to Friday low, price reached back into it, and this is also coupled with the 1 day CB. So on the 1 day CB, let me just take off the 6 month key level. Yes, so the chart is not that full of boxes and you don't know what the boxes is. But price on this Friday high to Friday low, which was week 1, which was the NFP candlestick, price reached into this discount with consecutive encroachment, meaning that it traded to into some of the discount array right here, which was then we should use it as a balanced price range. It's also coupled with this gap right here, but these are more of an analytic. This is me analyzing and recapping because once price was trading the candlestick, you will not look at this. Oh yeah, it's going to reverse right here. Yes, you are bullish and we are expecting higher prices, but a lot of people like me expected that the Tuesday of the week was in, even though that I mentioned that we had this warning sign. So even though that I was warned and I was like, yo, be careful, I still believe that Tuesday low of the week was too perfect in some sense by the pattern, by the time of the PD array, by everything, that I ignored this warning of the Tuesday trading to the week 3 high, which is not usually a thing that you want to see. Tuesday delivering immediately after a bullish reversal. That usually does not happen because, as we can see, Tuesday usually makes a reversal on the second half and not on the first half. What I mean by that is that Tuesday usually makes the reversal. If you're expecting a Monday accumulation, Tuesday reversal, Tuesday manipulation, and then Wednesday distribution, you may be expecting a Tuesday to make the reversal at not the first reversal, so not the open low high close, but the open low high being the weekly reversal. Like for this week, the reversal was the high and not the low. Even though that we have an open low high close, and the high close was to close the candlestick, it was also to make the weekly high. On the 12 hour, we had weekly opening, followed by the Monday candlestick. This is Monday. This is then Tuesday, making the Tuesday low, Tuesday high, which the Tuesday Y was the high of the week. Followed by Wednesday, trading lower, which was once again Wednesday low. The second reversal of Wednesday to close the Wednesday candlestick was the weekly low of the week, followed then by the Thursday and then Friday candlesticks, closing the DXY week 4. What can I see? Monthly accumulation, Monday accumulation, and Monday has 3 candlesticks because the week opened at 17 and the days open at 19. So that's why Monday on the XY has 3 candlesticks. 3 candlesticks. These are then followed by the so on reversal that I call right here. Tuesday, Monday, Monday low traded to into a key level, which is like the pattern to see a Tuesday reversal, and then we are followed by the expansion, making the Tuesday high of the week. So Tuesday, second reversal high of the week. This was at 5 12-hour candlestick. Uh, and this was Wednesday, second reversal, low of the week, low of the week slash low of the day, high of the week slash high of the day. because it's also the eye of the week, which shows also the eye of the day. And this was the low of the week, which was also the Wednesday low of the day. And then Wednesday traded lower, we're making the Tuesday eye, eye of the week, and Wednesday low of the week, followed by this Thursday expansion higher, and then this some sense of accumulation, I would say so. On the 8-hour candlestick, this is right, this is nice. It's nice, I can 1, 2, 3, 1, 2, 3, 1, 2, 3. So weekly open, weekly close, half of the week right here. What can I see? That Tuesday, second reversal after half week was the 5 12-hour candlestick, which means that it's the 11. It's the C3 8-hour candlestick. On the Wednesday candlestick, it was different. We had the 19, 3 and the 3-hour candlestick making the low of the week, and then on the 11 candlestick that was not seen to be the reversal like it was seen here. Then we have the 3 8-hour candlestick making the low of the week. So you can see Monday range, Tuesday range, reversal, this turtle soup right here making the eye of the week. This is a SMT, I'm pretty sure, followed by price trading lower. Let me just eliminate this balance, this breaker, which I mentioned that was be looking for it to be inversed on the weekly candlestick. But yeah, that's basically to have price trading lower. Now into this fair value gap right here and ignoring this fair value gap above it. So we saw something that I don't like to see, which is price trading into the discount part of this inversion PD array, where I expected price to leave everything on this discount of this 1 week inversion fair value gap open and just use the premium. That's why I was, even though that I was warned about this Tuesday uh, Tuesday candlestick trading into the week 3 I was like, nah, that's too perfect. It's too good to be perfect almost. So I believed, yeah. Then I was not stopped out, but I was and then traded against because on Wednesday I tried to uh, I tried to imply that Wednesday OTE as a continuation turtle soup, and yeah, I was stopped out on a EU short trade. On the 4 hour, now I can see that the Tuesday second reversal slash eye of the day of the week inside of the 5 hour 12 hour. So inside of from between 5 a.m. to 5 p.m. we had the eye of the week. Inside of the 11 to 5 so 11 a.m. to 5 p.m. we had the eye of the week as well. I can see that we had the 11 for hour candlestick making the eye of the week and the eye of the day. On the low of the week, what I can see that we have it's the 7. So the 5 12-hour candlestick, so between 5 and 5 p.m. Inside of in the 8-hour chart, it's the 3-hour candlestick, so it's between 3 and 11. And in the 4-hour candlestick, it's between 7 and 11. So what can I say and what can I see with this is that between 5 and 7 or between 3 and 7 everything doesn't matter because that was not the time that price made the weekly low. It's a bit confused if someone is watching this far, which I don't believe. So that's why I'm being more specific and more confused because these are not terms but concepts that I just learned in a month, maybe 2 months, and they are new, and I don't know too well or not how to use them. That's also true, but how to explain and how to not identify, but make myself clear when trying to explain what's going on in my head, because I've I don't have a clear idea what are these concepts called. Like you have a fair value gap, and you can easily say that's a fair value gap because that's a clear concept. It's an imbalance in price. It's a gap. But mentioning time and how time works and how uh, sometimes the eye of the day, so the second reversal, because Tuesday make this first reversal and then the second reversal. Second reversal was indeed, which is usually not the important reversal, right? It was actually the eye of the week, which means that second reversal of Tuesday was the first reversal of the week. Like, and if you are not advanced or haven't dialed in into this idea, then it's impossible for you to for someone that hasn't gone into it understand. And that just comes with practice. And my practice right now is trying to explain it so I can get better because there's a teaching method where if you can teach to others in a simple way and easy to understand, it means that you are a master. That's why ICT explains like a fair value gap really simple. It's a gap. But if you go and dial in into fair value gaps, you can see that it's a turtle soup. You can see that it's a low or high important. You can see that it's also sometimes a premium to discount dealing range. You can see that it's sometimes there are low time frames PDRs inside of it, which can be redefined and used as an intermittent miles, intermittent most. So there are a lot of things, and that's one of the reasons why I'm trying to explain to get better at explaining this concept in some sense. But that's the whole idea. It's that Tuesday make this almost perfect low of the week, followed by this price expanding higher. So Tuesday low, Tuesday high, Tuesday first change in the state of delivery, Tuesday second change in state of delivery, which is the weekly first reversal. This is then followed by Wednesday. Wednesday first change in the state of delivery, making the high of the day, which is then followed by this Wednesday second reversal slash second change in state of delivery, which was also the second uh, weekly reversal. So this was in sync, and this wasn't because this was two for Tuesday, one for weekly, and this was the two for Wednesday, but it was also two for the weekly. On the 2 hour chart or the 1 hour, I guess I can go into the 2 hour chart. I'm not a huge fan. I really prefer using the 1 hour. Not a huge fan of the 2 hour chart. Now on the 1 hour, I can see that the on the 1 hour chart, the low of the week was the 9 1 hour candlestick on Tuesday, and and it was on the second week. So the second half of the week. So the first half of the week, being the Tuesday high and the Tuesday low, was used as a range, meaning that no, no, it was yes, it was you. I'm talking about you already, because you already reached into this Tuesday low, which is this Tuesday high. So yeah, I'm getting confused by myself. But you can see the Monday accumulation. That's important. Tuesday reaching to this inversion fair value gap, which was my weekly reversal, followed by the fair value gap, which is the turtle soup reversal. I have the week at the 12th. Just the 12 1 hour candlestick as the eye of the day, and also eye of the week. Followed by the delivery on the right side, on the downside, Wednesday, making the low of the week on the second half. So first half eye of the week, second half of the week making the low of the week, and then the price just started trading on upside, ranging inside of it. Where I believe that they are going to continue on the upside on Monday. So I'll be interested in using this fair value gap to deliver it back on the upside. If I was trading a pattern, I would be shorting right here. But I don't believe that on this Passover week, with the FOMC, so fuck, with the NFP, I don't believe that we are going to deliver it lower. So this is important to me to mention. This 2 hour, 4 hour, yeah, this 4 hour key level I want to note it because I have now a notepad that I can note these things and make, and I have like a yellow notepad to be more clear during the day. So that's everything for me on the XY. I'm really thirsty, always talking. Now on EU, everything that I mentioned is inversed, but we have only one thing that I want to talk about, which uh, is the SMT, where Friday traded into the Tuesday low slash Tuesday high on the XY, and as I saw on the XY, that has not been seen. With that, what I mean, weekly high, weekly low, same thing, price reach into a weekly premium, inversing. On daily chart, we can see the same thing of with the busy. So daily chart have the same CB in this case, so busy on the XY, CB on EU, and with the bodies, we had the bodies telling the story while the wicks are doing the damage and wicking into the CB. And a lot of people were shocked on this kind of delivery. So we can see now the Monday candlestick, followed by the Tuesday, same thing. Tuesday trading above the Thursday high and the Monday high, and then the reversal lower into the weekly low, the week 3 low, which is the inversion of this, right? This was then followed by the Wednesday trading higher, so opposed. So we have there Tuesday high of the week, Wednesday low of the week. In this case on EU we have Tuesday making this low of the week, and then Wednesday making this high of the week. And this is where the SMT comes, where then after this Wednesday high of the week, Wednesday low of the week, we had price delivering lower. And on Friday, that so-called Tuesday high of the week, Tuesday high of the week, was then taken with this equalize, and then Friday took it, making a Friday low of the week. So we had an opening price, high, low, close. On 12 hour, I'll be now noting the candlesticks on itself. So I have the first Monday candlestick, first half, second half, Tuesday candlestick, Tuesday first half, Tuesday second half, followed by the Wednesday candlestick, Wednesday first 12 hours, Wednesday second 12 hours, Thursday, Thursday first 12 hours, followed by Thursday second 12 hours, and then we had Friday, Friday first 12 hours, and Friday second 12 hours. Eye of the week, where in the same case we have the eye of the week, the middle of the eye of the week, which is low of the week on the XY, being made on the second half of the weekly candlestick. And now in EU, yes, we use the first weekly half. So week one, first weekly half high, first weekly half low, and we had turtle soup, reversal, and then price traded lower into the first half low. Uh, on the 8 hour, we had now basically the same thing happened on the XY, but everything that I mentioned it's now inversed because that's how the XY and U are correlated. So whereas we had the Tuesday low of the week, we had now this Tuesday high of the week with this three dive pattern, price and immediately trade lower, making this low of the week. And then this low of the week, which I was expecting that to be a low of the week. So it's a Tuesday low of the day, not low of the week. This Tuesday low of the day was the inception of this move higher. Price made this Wednesday high. So we have this Tuesday high at the okay. Tuesday high. Sorry. Wednesday high of the week slash high of the day slash of the week, and it was 5 12 hour. If I'm not wrong, I think that I noted it wrong right here. Yeah, it's not 5 12 hour, but it's 7 12 hour because on the XY it's 7. That's my mistake. On EU it's 5. It's 5 5 5, so 5 p.m., 5 a.m., 5 p.m. And in the XY is 7 p.m., 7 a.m., and 7 p.m. to make two 12-hour candlesticks with open high, low, and close. But 5 12 hour, and then we have the 9, so 9 8 hour, and on the low we add Friday low of the day slash high of low of the week. So this was the first. So in this case, the high of the week was the first reversal of the weekly candlestick, but it was the Wednesday second reversal because it was the high of Wednesday, high of the week, which was first week. It was the weekly reversal, and then on Friday we had the Friday low of the day, so the first reversal of Friday, making the first reversal, then second reversal. But the Friday first reversal was the week second reversal, making the weekly low. So here it's first and first Yukio second, Yukio first, Yukio second, okay, eye of the day, and Akio first pursued eye of the week. And it was on the 17 12 hour, so it's between 17 and 5, and it was also between, if I'm not wrong, right, yeah, it was the low of the week, and the low of the day was made on the first half of the Friday candlestick, and it was Friday's 12 hour, and it was on 1 hour 8 hour candlestick, so between 1 and 9. So based on that, I can already say that this Friday low, this weekly low, was made between 1 and 5. Between the 1 and the 5 hour candlestick, this low of the week was. So that was the 4 hour candlestick that this low was made. Whereas this 4 hour candlestick, based on the math, was. Hmm, I can't say because it's between. It's between. There's a. There's a possibility of being two candlesticks. Of being two candlesticks. It's between 9 candlestick and the 9 4 hour candlestick and the 13 4 hour candlestick. But I will be now going lower on the 4 hour chart on itself. And it was the 9 on the itself, okay. 5 9 4 hour candlestick. And on this it was the 1, like I mentioned. 1 4 hour candlestick. being most of the move for this week. So if I want to be part of this week, if I want to be catching a reversal of this week, then I'll be putting myself into this Wednesday eye all the way lower, all the way lower into this Friday low of the day, low of the week. That would be my ideal scenario and ideal trade because it would capitalize most of the move of the Wednesday of the weekly candlestick on itself. Fuck, I'm getting confused, but no one is watching, so what can I say? It's just for me to practice my English, so that's it. Practicing my English, getting used to be recording and talking, because when you talk, sometimes things start to making sense in your head. So if you don't do it, you don't get better. That's it. Okay, that's perfect. Let me just take this. I can still have it. Now on the 1 hour ending. I'm not mentioning weekly open because I'm already looking at weekly open. So I'm not saying, oh, this is the weekly open and price once it traded higher on Tuesday, then it reversed lower. And once it was below the previous week's low and below the weekly open, then you had this another reversal. Yes, that's indeed true. But I'm not looking at the weekly open. It's a good measure and it's very useful. But this is a shop candlestick, and in shopping candlesticks slash range candlesticks, that is what happens. Price just uses the weekly open, and once it's below it and below the liquidity pool, then it's going to reverse higher, and it's always going like back and forth. So higher, lower, weekly open, previous week low, higher, weekly open, key level, turtles buy side pool, lower, lower, higher, and it's all the time on this type of conditions. Couple that with now DX with EU trading into this fair value gap, touching with this eye, where then price is now retracing, trading lower, which is possible to see price continue to trading lower and lower because I want the DXY to continuously trade higher and higher. So that's why, even though that I'm a EU based and GU based trader, mostly EU right now, I put most of my focus on the XY because that is the fuck, not the inception, but that is like the mother of EU in some sense. I think that's the best way to put it. I'm not getting the word that I want. So on the 1 hour chart, what can I see? That on on the 1 hour chart, the low of the week was the 2 hour, 1 hour candlestick on Friday on the second half, and on the 1 hour chart, push punch, it was the 9 hour, 1 hour candlestick the as the eye of the week and eye of the day for Wednesday. So I guess this is all. I will not be going lower. I think 1 hour it's the best to look at the weekly range. Some things that I mentioned are confused, even for me. So give me more time. Any question, just ask me. I might not be able to answer it, but it is what it is. And this is my way of viewing candlesticks and viewing price on itself. So yeah, I guess that's it. Have a nice weekend. Have a following nice Passover week, and have a nice February month, which is very soon to be starting. So already 1 month of the year has been gone, and I hope that it was well spent within you. So that's all.